What we're trying to do is do as much as we possibly can as low as possible cost. You can't just sit on your hands, right, and do nothing. We achieved one hell of a lot last year. We're now the largest landholder for nuclear fuels or uranium in Namibia. We've got exploration success. We've found 2 paleo channels on the first EPL we've explored of 14 EPLs. You've got a technology that nobody else has got. And whilst others are sitting on their hands waiting for the uranium price to go up, we're doing something, but we're not spending a lot of money to do it. So I think investors are very appreciative of the fact that we are getting a good bang for our buck.
Hello and welcome to Crux Investor. We spoke earlier today to Murray Hill, who is the CEO of Marenica Energy. They're an Australian uranium player with assets in Australia and Namibia. We talked to him about those assets and their upgrade technology, plus a bunch of other topics too. So check out the description below and click on the relevant timestamp, and that'll take you to that part of the video. And if I could ask you if you could subscribe to our YouTube channel by clicking the button in the corner of the screen. And if you want to see more stories like this, please click the notification bell. So let's hear what Murray had to say. Hello, Murray. How are you, sir?
Yeah, good, thanks. Yourself?
Not too bad, not too bad. Thanks for joining us today. We're going to hear all about your story. So why don't we kick off with a 1-minute summary, and then I'll get stuck into some questions.
So Marenica Energy, Perth-based junior explorer, focused on uranium projects in Namibia and Australia. And what differentiates us from the rest, we've got a process technology in-house developed called U-pgrade, which lowers the cost base for processing the styles of ores, the calcrete styles of ores, by 50%. So we're probably the most active uranium explorer on the ASX at the moment, both in acquisitions and exploration.
Okay, can I just sort of, I'm intrigued and sort of understand, where this all started. Why have you got into uranium? Where have you found these projects? You were a private company before. You've gone public. So give us that background.
We've always been public for a long time, but focused on other commodities years and years ago. So I think in about 2009, I think they picked up the uranium project in Namibia, Marenica Uranium Project. I joined in early 2012, initially as a consultant to look at what they could do, because they had a single project, declining uranium price, low grade project. What do you do? So we either had to be innovative or walk away. So we decided to be innovative. I'm a metallurgist by profession. We formed a technical steering committee of industry experts, consultants, to develop some form of process to try and reduce the cost base for the calcrete ores in Namibia. We achieved that. We put 3 patents in place over it, and then we realised that, gee, we can really apply this to a lot of other ground in Namibia and other assets around the world. So then we started to build, and particularly in the last 12 months, we really started to build a big portfolio of uranium assets.
Okay, so, let's start with the money side of things first, because I do want to get into upgrade, and I do want to talk about the assets, but let's deal with the money side of things first. So market cap around 8 million. How much cash are you sitting on today?
Yeah, about $1 million.
Right. Okay. So whichever way and I don't know what your burn rate is.
You've got a fairly low burn rate. We've got 2 of us in the office, and another girl a girl Friday that works a few days a week.
Right.
And we've got consultants and contractors that support us from our exploration efforts. So we get a low burn rate compared to most companies. About 800 a year.
I need to sort of understand what your plans are for this year to kind of understand what your cash needs are going to be. You're going to have to raise some money, presumably just for pure G&A, and depending on what you're planning in country, again, that's going to help define that number. But at this level, Namibian assets, Australian assets, at the moment they feel like liabilities to me, because you've got lots of licenses, you've got to do stuff with them. So how do you go about talking to the market in today's current climate and persuade them to give you money?
Yeah, well, I suppose what we're trying to do is do as much as we possibly can as low as possible cost. An example of that, say, is we've drilled 50 holes in Namibia, cost us 50,000 Australian dollars. Right, 50 holes has defined copies to paleo channel, so that really adds a lot of value, and we've hit some significant uranium grades in amongst that. So with the Australian assets, we're also looking at applying upgrade. And looking at some of the low-hanging fruit, like U-pgrade's got no resource on it. Go and put a resource on it, right? And that's not going to cost. It might cost you $30,000. So we're trying to add value by limiting our burn rate, right, our spend, and really adding as much bang for your buck for shareholders. yes, you have to keep raising money. That's a an issue with a junior at the moment. You just can't raise enough money to keep you going for a long period of time.
Okay.
And you're in the uranium sector, and it's not loved at the moment.
It's definitely not loved at the moment. I think there's great expectations around the macro story, which we won't talk about today. But as price stands today, there's going to be very few institutions willing to step into the breach, as it were, and on a leap of faith. At the moment. So that's what I'm wondering.
Yeah.
Like, are you having conversations? Are you getting much feedback from brokers or or indeed funds at the moment?
Yeah, look, we've got 2 supportive brokers in Australia that have supported us over the last 4 or 5 capital raisings, and they'll certainly be there for the next one. So that's been very helpful for us. And we've got a good support base, I would have said, but not strong. Not people throwing money at you, but who is getting money thrown at them in the uranium space at the moment.
So are you having conversations at board level about the quantum of money that you're going to need to get out to market to do? I get you saying we're doing everything cheaply. We're going to spend $30,000 here and we've spent $50,000 there, but those sorts of numbers don't deliver meaningful resource numbers. That sort of spend doesn't deliver drill results which can get the market excited, does it?
Well, it does. $50,000 spent in Namibia, and I'll quote you some numbers. We hit 13 metres at 905 ppm, including 2 metres at 4,500. And another drill hole, that was at Copies 1, another 1.5 kilometres south, Copies 2, we hit 10 metres at 687 ppm, including 2 metres at 1,974. So they're significant numbers. They're along the sort of numbers, and when you average them out across the drilling we've done, we've now got grades in the order of 300, 350 ppm average, right? And we've also got a channel in Copies 2 that's wide as the EPL, 3.6 kilometres, and about 1.2 kilometres from north to south. So it's a significant size, and that's been defined by the drilling on a very, very small amount of money. So we'll continue to be wise with our spend rate. And yes, at board level, we are talking about, okay, what's the quantum and what do we do? If we get this much, we'll do that. If we get a bit more, we'll do that.
Mm-hmm.
So we have to, you can't just sit on your hands, right, and do nothing, right? Because your burn rate's 800,000 a year, right? So you've got to do something. And we think we're doing a great job and I wrote an email to the board in December last year and said, Merry Christmas, and this is what we've achieved in the last 12 months. I was surprised. I was shocked actually about how much we'd achieved, because you're working away and you don't sit back to realise what you've actually achieved. We achieved one hell of a lot last year. We're now the largest landholder for nuclear fuels or uranium in Namibia. We've got exploration success. We've found 2 paleo channels on the first EPL we've explored of 14 EPLs, and getting some excellent results I just mentioned to you. We've just purchased or acquired off Optimal Mining Australian assets, £48.5 million at 860 ppm, right? So significant resources where we can add value by applying upgrade to it. I think we're doing a great job at the moment. The market's not recognised it, and we'll continue to work hard with low spend rate. I mean, if you had $10 million, your exploration efforts would be different, right? But you're not going to raise 10 million, we're going to market cap of 8. So we certainly, I think we've been quite prudent with the money we've got, and we're doing a good job of adding value for shareholders.
Okay, so
the problem is nobody knows who we are. So we need to get out there and tell the story like I'm telling you now.
Right, okay, so you haven't got a number in mind yet, but you're talking about it, or are you able to share something with us in terms of what you're thinking?
Yeah, we're talking about we're talking about anywhere between 1 and 3 million, and what we might do if we had that money. Right?
Okay.
So it really depends on how we go about the capital raising, right? And how much money we do get in the door.
Okay, but you'd rather not raise. Well, I don't think you're going, as he's just said, you're not going to be able to raise a lot of money because the market cap's low, but also market conditions probably dictate that as well. So you'll raise enough to kind of just keep things motoring along as you did last year. Okay, get it. So shares haven't really moved. You've kind of finished, the last 12 months, you're kind of where you were 12 months ago. There's been a little bit of volatility in there, which can be interesting. But what's been going on with the shares?
Well, I suppose when we acquired these optimal assets, it was an in-specie distribution. So we issued 27.5 million shares to optimal shareholders, right, at the ratio they have in optimal. So these people were sitting, their shareholders were sitting there for 4 years in a private company with no access to their money, and all of a sudden, the ASX listed shares. So what's happened to us is we've been belted down from 9 to 10 cents down to 7 cents by one of the larger shareholders of Optimal selling his shares, right? So, that, and when you're low liquidity, there's an announcement come out today. I bought some of those shares, some more, because my wife's got a lot of the shares in the company because we believe in what we're doing, believe in uranium. And I picked up some of those just the other day. So that hasn't helped us. But when we talked before, the peers, right, we're actually, as much as we've gone sideways, we're actually performing better than our peers. So
that's a fairly low base. Yeah, but this shows for investors they can invest in whatever they want, right? So comparing against peers is helpful for you, but for investors, obviously they've got a lot of choice. So, but I can understand why you said that. Let's get back into the asset now, because I don't say, the shares are doing what they're doing, and you can only control what you can control. Yeah. So, how many pounds in the ground have you got at the moment?
So we've got 61 million pound in Namibia, right, and 48.5 million pound in Australia. Okay. So we're one of the larger asset bases on the ASX, actually.
Okay, and obviously you want to grow that. What do you know about the ore body at the moment? I mean, are these fairly narrow channels that you're dealing with, or do you see a sort of a homogeneous ore base?
Well, the paleo channels are historic rivers. Yeah. And you know that rivers can be wide in some parts and shallow and deep in others and meander. So it's not a uniform shape or size. We have established so far that Copies 2 is about 1.2 kilometres wide, but we're not sure we've actually determined the extent of it. Our drilling didn't go quite far enough north and south to be well out of the channel. So we may still be in channel. And it's gone the full width of the EPL. At that point is 3.6 kilometres. So it's coming from one of our other EPLs, which we've only just received environmental clearance to commence exploring. So we do know that region, the tumultuous region, runs about 300, 350 ppm. We're getting those sort of average grades, thicknesses somewhere in the order of 7 metres, and the deepest drill hole was 20 metres. Right. So, it's all very shallow.
It's all very shallow. So
easy mining.
It's easy mining. Do you imagine it will continue like that? I mean, I guess it's, again, early days to be talking about strip ratios, etc. But what do you know?
What we know is that the channel that runs 120 kilometres already explored, it's not deep, right? It doesn't go beyond 20, 25 metres generally. So we know it's all shallow. Our deposit, the Marenica Uranium Project, north of Copies, again, I think the deepest pit we put her on, it was about 30, 35 metres, right? Mostly from surface down. So all very shallow. So we do know we're not going to be encountering deep ore bodies, right? We know that the mining is going to be probably the easiest mining you've got because it's relatively shallow and it's easy. It's calcrete ore. It's not hard, right? And we also have the edge because we have this upgrade process, right, that lowers the cost base. So we did a scoping study on the Marenica project, which is 94 ppm. Unfortunately, ASX won't allow us to release all the data because it's an inferred resource. But we have put out in the public domain $40-45 a pound C1. Now, on 94 ppm, that's a pretty good C1, right? And that puts us, again, unfortunately, I'm going to compare with peers, but it puts us in the same sort of trigger price for development of project as our peers in Namibia. But what we've established that most of those costs, operating costs, are tonnes based. So if you double the grade, you halve the cost. If you triple the grade, then it's a third. So hence we're looking now for plus 200 ppm ore bodies, because at plus 300 ppm, for instance, the operating costs are less than $20 a pound. So all of a sudden, you're comparing yourself to, the lowest operating cost producers around. So we're quite excited about what we're getting in Namibia because they are around that plus 300 ppm grade, and we know that upgrade will work on it. We know it can reduce the mass to less than 5%. On the Marenica ore, upgrade takes it from 94 ppm to 5,000 ppm, right? So what that means is that you then have a lot less to leach, right? So there's a lot less mass going into that leach circuit, which is a high cost unit operation. And it also gives you flexibility. So optionality, we can take a concentrate from an upgrade process and take it to an existing facility like Rossing, who've been operating for 44 years, put the concentrate in their leach circuit, use their leach, use their tailings dam, use their refinery and their transport corridors for your reagents. So environmentally, big difference. We are environmentally conscious in that respect, right? So upgrade gives us the advantage and is a catalyst for us to explore.
Okay,
that's why we're keen to go and spend money on exploration now.
Well, okay, well, let's get back to upgrade because I've got a lot of questions sent in by a lot of people trying to understand it. So we will get onto that. Let's come back to what your plan is. So you have acquired a large land packages. You've been accumulated. It's quite significant.
Yep.
Why? What's the business plan? What's the what model are you trying to engage here? Why buy up so much land? Because I don't know. It can't have been that expensive. I guess is what you're going to probably tell me.
Well,
but you're going to have to spend a lot of money on it.
So the cost is roughly 2,000 Australian dollars per EPL. We've got 14 EPLs, so it hasn't cost as much. So when you say buy it up, it's really putting your foot on it. Yes, there is a requirement to spend, right? A minimum spend requirement, but most mining departments around the world, the government departments, Australia and Namibia, are understanding of where the uranium price is. So you say, look, we haven't been able to raise the capital to go and spend money on exploration, but we will, once we can, we will go and spend. So you don't always have to spend the money you say, right? You want to, because you want to demonstrate that you're doing the right thing, but you can't always raise the money to do so. But our strategy is to get our foot on land packages that we believe are prospective for uranium and shallow uranium, secondary uranium, which our upgrade process applied to and lower the cost base. So we've looked in Namibia, we looked at, because these paleo channels, the uranium's leached from a primary source, it flows towards the ocean in solution, and then it precipitates out when it gets the conditions that are right for it. We know that you have to start looking upstream of known deposits, and that's where we are. We're looking upstream of deep yellow tumors, upstream of Langerheinrich, right? And what we're finding is we are finding uranium. We also went back and looked at historical exploration done in the late 70s, right, by General Mining, way back in Namibia, and we've found some of the reports. We haven't found all the reports. We've found some drill holes in the field, a little bit of PVC pipe sticking out of the ground, or HDPE pipe, sticking out of the ground, and that's given us a confidence that these blokes knew what they were doing. We've gone and drilled where they drilled previously, and we come up with some great hits. So it's not just picking up moose pasture. It's right. What are we picking up? We're picking up high quality exploration ground. Why are we picking up? Because we've got a technology that nobody else has got to halve the cost base for developing these projects.
Like I say, we will come on to it. But first of all, I need to understand, is the plan, or do you think your plan is to raise the money and do all of this yourself, or are you talking to the likes of Langer, Heinrich or Rossing to do joint ventures or farm-ins, or, how do you pay for all of this? Because I say, with all of that land comes the need to spend money, and I guess it ramps up, but you're going to need to raise money. And as we talked about earlier, with an 8 million market cap, that's a tough conversation. So how are you going forward?
You continue to spend the 200,000 a year on an EPL and get 200 drill holes into it, right? And prove there's uranium there. That will hopefully then drive a increase in your share price and hence your market cap and your ability to raise money because you're successfully exploring. You're a successful explorer. You've got a technology that nobody else has got. And whilst others are sitting on their hands waiting for the uranium price to go up, we're doing something, but we're not spending a lot of money to do it. So I think investors are very appreciative of the fact that we are getting a good bang for our buck. So they know that we've got a low burn rate from people we've got in the office. We don't have many, and we know we're successfully. They know we're successfully exploring. So then you back a proven horse, right? So that's when we think we're going to get investors coming in going, well, gee, you got a good portfolio of land, you're exploring successfully, and you've got more ground to explore.
Okay, so you've
that's
just
where
told
we think we're going to get investors coming in.
Right, so you've just told me you think that you guys can do this yourself. You've got no plans to partner up, JV, farm out, farm in with other players in the market?
Not for the exploration phase.
No, of course not. But I'm talking about going forward. What's the business plan here? What's the exit for people? Where's the point where you start making or showing, money coming?
Well, I think once if we've got, say, 5 EPIs and we've got exploration success on, then things will change. We'll have to start thinking about how we go and put resources on each of those, right? So do you bring someone in to farm in? Do you sell it to someone else to go and do it?
Yeah.
Juniors are usually bought out by the next tier up. Does that happen for us? So, and with a small move in the uranium price, things are going to change drastically as well.
Well, you need a big move in the uranium price right now, don't we?
Well, we do, but as I said before, we're at less than $20 a pound for a plus 300 ppm deposit.
But you've got to make money,
right? So you're not going to develop it at 25. You're right there because you've got capital to pay for. But we don't need to get it to 65 like most of our peers do. Most people, that's.
But you need to get it to 45.
Indicated trigger price.
You need to get it to 45. Don't
you do. You do.
Because you've got to make money.
You do. Oh, absolutely. Absolutely. You're not going to not make money. But what I'm saying is we don't need to get it to the 65 to develop a project on plus 300 ppm.
I get it. So, but again, just finish.
We'll come in earlier.
We're going to talk. Okay, we're going to talk about upgrade. We're literally nearly at the upgrade bit, but I'm just trying to understand the plan here, because you're not seriously contemplating building a processing plant yourself. You're going to have to partner up or toll or work with in this case probably Langer Heinrich. In fact, they may want you at that stage. They may have run out of their higher grade ore.
Here's an opportunity, right? Before Rio Tinto sold Rossing, we had talks with Rio Tinto about the potential to take a concentrate from upgrade to their plant in Rossing in Namibia. That's a real option. So then if you want to build a 2 million pound per annum plant, you're going to spend 50, 60 million, right? And by the time we get to the uranium price is high enough for us to develop the project, what's our market cap going to be? It's not going to be 8 million. Right, we're going to have resources to be developed. We're going to be looking at building a project. If it is still not high enough, then we have to be looking at partnering up, or do you sell it? So that's like getting the cart in front of the horse now, because you don't really know where you're going to be in 2 years' time as to what that might look like.
Yeah, but some companies have a plan. Some companies walk into this with a plan and say, we have got a very clear exit, or we've got a very clear plan for growth, and this is the sort of company we are. We're a project developer. We are an explorer, developer, but not producer. So that's what I'm trying to get out of you. What are you guys? What have you got the experience on the board of doing, and what are you in reality going to be able to deliver?
Well, we're an exploration company that will build an asset base that's attractive for someone to take out to develop, more than likely.
Good.
That's where we believe we'll be.
Awesome. Now let's talk about upgrade. I do want to talk about upgrade. We got there because what I've read about it. And the questions that have been sent in. And there's not a lot of information to go on, okay? So it feels like a black box. It's a mysterious black box for us at the moment, but you are going to open that up for us today, hopefully. What is it?
Upgrade is a beneficiation process developed to reduce the mass to be leached. So in a Namibian, say we're working on Namibia here, in a Namibian uranium deposit, secondary deposit, the top 15% of the ore, 3 to 4 meters, the 15% of the ore body generally is high in sulfates. So you take that to an alkali leach, it consumes too much alkali. So for a Langer Heinrich circuit, there's a heap of calcite in the ore, so you can't acid leach it. So what do? If you go down the alkali leach route, it's a 93 degrees leach, right? It's expensive, and you can't process 15% of your ore, right? So what we said, right, how can we do this better? So we initially tried to concentrate uranium, and we got some fantastic results. We got 7,000 plus ppm from an 80 ppm sample with uranium, but the recovery was low. And what we worked out is that we have to look at the gangue characteristics. So the minerals that don't contain uranium, right? See what's in the ore, see what their associations on, and focus on them. So that's what this process does. It uses conventional unit operations that you'd find in a mineral sands, a base metal, a gold plant, and we apply them in an unconventional manner, right, to uranium ore that nobody else has ever done before.
Right. So this clearly proprietary to you? It's your trademark. Is it trademark? Yes. It says TM, but okay, it is. Okay, and it gets rid of the acid absorbing carbonates, which are Namibian. It's a Namibian specific.
Also Australia as well.
It works in Australia.
Calcrete deposit around.
Okay.
Yeah, it works on any calcrete deposit. Semi-arid to arid regions around the world, right? That's where it'll work.
Okay, and
so we've currently got assets in Australia and Namibia.
Okay, so and the benefit for that is you can the beneficiated ore can be treated with sulfuric acid as opposed to the slightly more expensive alkaline leaching. You say that there's a cost saving component to it. Yeah. Is that the USP, or is there more to it?
Obviously the benefit is you're taking the acid consumers out, so you can go to an acid leach.
Right.
And because you might leave some of the sulfates in there at the top 15% of the ore body, it doesn't matter because you go into a sulfate leach, right?
Right.
So it's a cheaper, easier form of leaching, right? And it's more well known. There's only one plant that operated an alkaline leach in the world. It doesn't operate now. It's in care and maintenance, Langer Heinrich. So you can imagine acid leach is very, very well known, whereas alkaline is not as well. And so really it's a function of getting the mass down prior to leach as well. So we get down the mass from Marenica, we get down to less than 2% of the mined ore. So the benefit is yes, you got rid of the calcite, you can go to an acid leach. But now, what do you do with that 2% of the mass? Do you put it in your own leach circuit, or do you take it somewhere else? So it gives you optionality. So for instance, you can develop a project without putting a leach refinery in. And leach refinery is going to they're the hardest parts to commission. They'll take the longest ramp up and so forth, right? OH&S issues, environmental issues. So let's go and take it to another facility that's leached for a long period of time, knows what they're doing, got everything set up, running well, take it there. That's an option for you. Or you go and build your own leach refinery if you've got a big enough project, right? But you just see how you go. And you might even, and also the other thing you can do is a very small deposit, like say you generally need about at least 30 million pound to have a standalone uranium processing facility, right? What we're saying, if you've got 10 million pound, you're never going to build your standalone. But if you've got 10 million pound, you can produce a concentrate from upgrade and truck it to somewhere else to leach. So you can develop smaller deposits than anybody else can. And you've got the option of what you do. We might have say 5 EPLs with 15, 20 million pound on each. None of them stand up alone. Put them all together with a central leach refinery, and you've got a great project.
Okay, so these are the conversations you were having with Rossing, and presumably you have or will have with Husab as well. Potentially, it kind of spices up their production numbers.
Yeah, that's absolutely. We've had the conversation with Rossing. I can say that. Yeah.
Okay.
That was Rio Tinto, though, right?
Right, but not Husab. Okay. Why have you trademarked it? I mean, are you planning to sell this to other companies to use? I mean, has anyone tested it? That's
an option, is to sell the technology, right? We've tested most ores in Namibia. So we've tested Langer Heinrich, Tumultuous, Isinamis, Trikopi, our ore, and the process works fantastic on all of them, right? So every single ore we've tested in Namibia, it works very, very well. So it gives us a great confidence that if we go and find ore at Copies, or we go and find it at Mile 72, or we go and find it on one of their other EPLs, we know we're going to be able to process it through upgrade. We've got 3 patents over it because we want to protect ourselves. Rather than try and be first mover, at least you're protected through your patents.
Have you tried it at Trecopia? Have you tried?
Trecopia, yeah.
You have tried it there?
Absolutely.
Works there?
Yeah.
A little bit messy there, isn't it? Are you able to work with them yet?
Absolutely. We've got no problems with Orano. No,
Okay.
they've got a nice deposit, albeit low grade, a bit like the Marenica project. But being 30 kilometres from the Marenica project, they've got ore that they can't process through their heap leach process that we can, because it's got high sulfate.
Have you had those conversations?
That's we've had those conversations, yeah. And those conversations are those conversations. And, some things I've seen you probe other people about, trying to get information. But at the end of the day, there's some conversations you have stay as a conversation between two parties, right? And that's one conversation we have had. So I'll certainly be meeting the Orano people at Indaba next week or the week after. That's one of the first meetings I have. But, yeah.
Okay.
Certainly could be some options there.
Watch this space. Is what you're telling me. And have people tried it and it hasn't worked? In outside of Namibia, for instance. You say it works in Australia, but have you sold it or tested it with other companies where it hasn't worked?
We've looked at some. So what we do is look at the mineralogy first. We've looked at some ore bodies, and the mineralogy is such that it's just not going to work, right? So one of the characteristics of it. You're looking at characteristics of what do these deposits look like? They've got clay, they've got calcites, they've got sulfates. Right? So you need to be able to remove those. And sometimes the uranium occurrence is in a form that you're just not going to be able to do much with. So, yeah, there are some that it won't work, and that's the beauty of what we do. We look at it and go, yes or no, right? There's no point going, we can probably get some money out of this mob by doing some test work. It's really about, yes, it will work, or no, it won't work.
Right.
So,
okay.
We don't need to talk to any further. So yeah, there's some in the world that won't work. Absolutely.
Okay, so what I'm sensing is that upgrade proprietary trademark technology. You've got the option of being able to sell it to others, but it's not core focus. It's not core revenue. Well, tell me, is it generating revenue for you? No, it's not. Okay. You've got to focus on what you've got and use it on your assets. That's where you're planning.
Yes.
Okay.
Yeah, I imagine if you've got selling it to someone else doesn't give you anywhere near the benefit of financial benefit of applying it to your own ore body. Yeah,
and I guess it's tricky, how would you even charge for it? Would it be a cash thing? Would it be a royalty thing? How do you even charge for something like that? Just out of interest.
There's a number of ways you can do it. Yeah, you can sell it. You can apply a royalty. You can apply a fee. There's a lot of examples of it out there. So
okay, but like your small team,
our focus is applying it to our own technology.
Great, okay, because your small team, not a lot of cash. There's not much point spending a lot of time developing that out of house. You've got to focus on what you're focusing on. So what is this year about? I guess got to get some cash, got to do some more drilling and work out what you've got, and then what?
So, yeah, get some more cash, obviously. In Namibia, it's about advancing exploration on Coppy's EPL, and another couple of EPLs which have been granted with environmental clearance to commence exploration. We're looking at those now and working out, what paleo channels might run through those. Do some HLEM, which is geophysics, to identify the channel and go and drill those. So we're expecting by the end of 2020, we'll have drilled on 3 different EPLs in Namibia.
Right.
And potentially more. We haven't drilled a channel that hasn't got uranium in it yet. So that's not to say that, it's going to happen, but that's, our success rate's been pretty good.
Okay.
In Australia, we're looking at these assets. We'll apply, we'll put a resource on Ubaguma. Minerva might have, we might be able to put a resource on that, another one we picked up. And then what value can we add to these assets in Australia through application of upgrade in various forms, because upgrade is not just one particular flow sheet; it's a number of flow sheets.
No, I get that, but again, I guess it comes down to how much money you raise as to what you're going to be able to do. Yes. And focus. Always important for juniors. So where's the time and money being spent? So you're going to work in both countries, Namibia and Australia, but scale is important to the market. Grade is important to the market. With upgrade, you're answering the grade story. Question is, the drilling in Namibia will give you the scale component, but Australia, putting a resource on, I mean, what kind of, it's going to be a small resource. You think it's just beneficial to, let's just put a resource on, it doesn't matter what the number is. Do you think that has an impact on the market?
It's not, no, it doesn't have a lot of impact on the market, but it's adding to our asset base, right? So as you know, the correction in the uranium price occurs, we've got a greater asset base to work off. But yeah, you're not going to spend a lot of money on doing a resource. So we might spend 30,000 on the Uberguma resource estimate, for instance.
Why bother?
We might spend 30,000.
Why not spend that 30,000 in Namibia and come back to Australia another time? Are you just appeasing the new Australian shareholders?
Yeah, well, no, it's really understanding what we've got and let people know what we have got there, right? So, and it's not a high cost. It's not as though you're spending hundreds of thousands of, like, it's even like the exploration. You know, people think you're doing exploration program and drilling and you're going to spend millions. We're not spending that. Other thing, we could go and spend 30,000 on applying upgrade to some of these resources in Australia to add value to them, right? Because we believe that we can add value to them.
But isn't that just a case of, you know, busy looking busy as opposed to busy generating real value? Because it seems to me what you're telling me about Namibia is you're finding uranium wherever you put a drill in the ground, right? And building out the size of the resource there could be good for you. And Namibia is, you know, low grades compared to, say, Niger or Athabasca Basin, sure. But that's why the scale of these things become interesting. So isn't time and effort best spent there?
Yeah, we're not spending a lot of time and effort in Australia. I mean, doing a resource assessment is a consultant, small amount of money. Doing test work on, you know, Angela, for instance, it's not a lot of money. It's not a lot of time. So it's not as though we're spending, you know, millions, as you say, you know, and it sort of sounds like people are thinking that you're spending too much money on things that don't matter, right? But it's a very small amount of money and they're adding value. So when you say, you need to add value, if you go and, you know, for instance, 100 kilos per tonne acid consumption at Angela, and we apply upgrade to it and we reduce it to 10, that's 90 kilos per tonne. At $200 a tonne for acid, that's $18 a pound or more. And you go, well, that's adding value, right? Reducing the operating costs. So we really, what we're doing is focused on adding value, not just spending money for the sake of spending. We could spend a lot of money on exploration in Australia, but it's not adding enough value, so we don't do that.
Okay. What are your shareholders telling you? What are they worried about? Because you say the share price is flat. Are they just putting that down to the spot price, the fact there's no contracts being written, and uranium, you know, it's static at the moment? Are you getting a kind of free ride at the moment? They're not really giving you too much chip because they understand? Or what are they demanding off of you? Our
long-term shareholders are very supportive of our efforts in Namibia, right? And very supportive of the asset acquisition in Australia, right? They see the value that upgrade brings to it, and they also see that they're all uranium bulls, obviously, and they see that uranium price will move. And the bigger the asset base we've got, the greater our leverage to the uranium price, right? So that's what they're seeing, and they're very supportive of where we're at. Most of them have bought shares and got sitting there waiting for that sunny day.
How much did the Australian assets cost?
It cost us $250,000 in cash and 27.5 million shares.
So, okay.
So we're not spending. That's the thing. We're not throwing money around. We're spending it wisely.
Yeah.
You pick up £48.5 million at 860 ppm for that much money. Tell me where you can do that.
No,
so we think we're doing well.
It's great. No, it's great option money. But why would someone sell it if it was that good? Who were the sellers and why did they sell?
They had a focus on cobalt.
Wow.
Offload their uranium.
That's the thing to focus on. When was that?
Well, that was a little while ago, yeah.
When cobalt was good.
When cobalt was a lot more attractive than it is, yeah.
They must be kicking themselves now. Right.
Yeah, and the other thing to note about that purchase price, it's equivalent to about 6 cents per pound of uranium in the ground, right? Now, I was a consultant to Extract Resources when they sold Husab. They sold it for $4.50 a pound, right? I'm not saying ours are worth $4.50 a pound, but 6 cents versus $4.50, well, you don't have to move too far to get our, value for our shareholders.
I mean, the thing is, you're where are you in this cycle? I mean, you've got to work out where you kind of fit into the mix here, because you're a long ways off from production, but you feel that you're going to exit before that point. So it doesn't matter, does it?
Yeah. Look, I think it makes sense to think that someone's going to buy you out before you get to production.
Right.
No.
Okay.
I think that's reality.
Okay, that's good. At least we know where you sit. Appreciate you kind of running through that. I'm intrigued by upgrade. What's going to do for you? I think let's be honest. Your focus should be, and doesn't sound like it's going to be, selling that into the markets. Your proprietary technology, and hopefully that works for you. And I'm personally intrigued to see what you do with people like Rossing and Husab and Langer Heinrich and Arano. Are they going to come beating your door down to use this technology or not? We shall see.
It only applies to secondary uranium deposits, so it doesn't apply to primary. So, for instance, Husab, Rossing doesn't apply to their deposits.
Okay.
But the potential then, for instance, they could concentrate.
Right. Okay. You sell that into them. Okay. Interesting. Well, look, stay in touch. Let us know how you get on. And do appreciate you making the time today to talk to us. Thank you.
Thank you.